Hey, everybody, Scott Stevens here with another perspective, the title of this particular adventure. And we're going to talk about, Bitcoin and cryptocurrencies. This is a topic that has been really kind of dear to my heart for the better part of 5 years now. Took my first plunge into Bitcoin in June, end of June, early July was by the time the settlement happened that I had my first Bitcoin. And at that point, when I bought it, like 30 June, it was $250 each. And so I spent 300 some odd dollars and I had one and a third Bitcoins. And I did it because I was concerned about the economy. I was concerned about the fiscal, excuse me, not physical, but fiscal situation that the country was in. And that was 5 years ago. We've had trillions of dollars since then, just magically created by the Federal Reserve. And this has happened across, other banks, other central banks as well. Companies have borrowed money like it's free. Oh, yeah, it kind of is. And sometimes they have to pay it back. Sometimes they don't. Sometimes they default. It was just literally just a free for all in the physical universe. And so it was kind of a little concerning for me. And so I bought it as a hedge. I first dabbled in the metals, gold and silver first, then a little bit of gold later on, but they just did not perform as I had hoped they would. I wanted to make those metals literally my retirement, but that wasn't a possibility. Because when you buy silver at $4, and then during the crisis of 2008, it ends up going up to what, $8, $9 tops. It just didn't move. In fact, it kind of moved in an inverse relationship to what I really thought it would have. And that was, for me, simply an example of manipulation, that the heavy hand was in play at that point in time. And I wanted an asset that was outside the gaze and reach and concern of the Fed. I don't think I got it, but it was something that I wanted. I wanted at that time was to be free of the Federal Reserve and their abilities to manipulate currencies. So what I wanted to do was, let's just do a window here instead of an aspect, a media say, let's just do the whole screen. We want to look at the beauty and potential of Bitcoin. I'd first seen it maybe 2011 in some stories in some of the alternative economics that I read, rather religiously. I know it had been around a little bit longer, 2009, 2010, and I just did not come across my sphere at that point in time because it was more likely an aspect of cryptography, and it was the cryptographic nerds that were into it, and that was definitely not me. I was still wounded from gold and silver, and so I didn't really get into the economics of the point in time. That was a big CBS, it was Market Watch at that point. That 2007, 2008 was CBS Market Watch. No, excuse me, it was just Market Watch. CBS hadn't bought it yet, and then it completely changed. Once CBS bought it, then the ability to have an open and fair discussion about economic things just didn't exist. It wasn't there. It was kind of stamped down. There was a lot more trolls than there should have been, and so I needed a place to go looking for more sound financial information, and that crash of 08 and 09 just kind of booted me from the old pattern, and I needed something else. And ultimately, Bitcoin was the one that won my gaze. So, where do you go? Is it too big a risk? Is it too well known for being used in the dark web for nefarious purposes, for that kind of a thing? Is it too tainted by that kind of press? And let me tell you, that press is intentional. They do not want Bitcoiners, that group, that cadre of people who understand it. They don't want it to grow. They absolutely do not want it to grow, because then they'll sell their Apple stock. They'll sell the GE stock. They'll go short Tesla. They'll pull their money out of the financial system that we all know, and then bring it into alternative investments. But if the unknown is never confronted, it'll never be surmounted. And so I kind of circled around Bitcoin for the better part of a year. I downloaded the app, I connected the bank account, but I never hit the buy button. I never followed through. And then it was just as if an impulse at one point just came across me, and I did. I bought, and that kind of changed things. So even today, as we kind of gaze across the financial landscape and horizon, the Nasdaq is near an all-time high. The S&P is near an all-time high. The Dow Jones is amazingly resilient for as in the dumps as the global economy is. And because there's no vaccine on the horizon, you've got to question how quickly can the economy recover. There are treatments, prophylactics that we can take, but those have been actively and aggressively suppressed. And those doctors, those medical care people that want to talk about the treatment and the ways to get us to normalize the economy are actively suppressed, and the licenses are suspended or revoked, or they're shamed. And so it's almost as if we've got to endure this COVID thing without the needed medicine. It's like having a headache that won't go away, and aspirin is bad for you. You can't take an aspirin. You can't take a Tylenol. You can't take a Motrin because it's bad for you, regardless of the effects, the positive effects that it would have on you. So what I did today, a quick search of why Bitcoin, just that, 2 words, why Bitcoin on DuckDuckGo, because I don't use Google, revealed 4 top stories. These were the top ones. Why Bitcoin may be in for a fall towards $6,000 is from News BTC. And why Bitcoin may be in a fall, there was an extreme possibility that Bitcoin plunges towards 6,000 in the coming sessions, according to historically accurate technical setup. And that is what's called a rising wedge, where you have Bitcoin doing this. It's hit the bottom part of the support, and it can't break out of resistance on the top part of the chart. But it's interesting, if you look at it logarithmically, Bitcoin has already broken through the top part. If you look at a linear chart where any unit of distance is equal, regardless of where it is, between 1 and 100 or 1 and 100 and 1,000, so forth and so on, logarithmically, it is absolutely broken through and should break out to the upside. But on a linear chart, it has not. It has failed at resistance, or it's at resistance imminently. And that's why they're saying that it is an extreme possibility that it would resolve to the downside. So that's the first story. And then the next story from Forbes, and it's a earlier in the year story, why it could hit 50,000 in 2020. And basically, it's the author is pointing out that Bitcoin is mostly uncorrelated to the rest of the market. And that's what diversification is all about. You don't want to buy a bucket of 15 stocks, of 15 items that all move the same way. You want to bet on the minority report. You want to bet on that investment vehicle, that tool, that asset, which when the rest go down, it goes up, because it'll minimize your move in one way or another. And you don't typically buy a portfolio for volatility, because you can kind of get shaken out of your position if you're on the wrong side of a trade. So you want to have an asset or 2 or 3 that are uncorrelated to what the rest of the market is doing. And this was the beauty of Bitcoin, is that it was that. And for a time, it was that in spades. He's also saying, yeah, asymmetric returns for holders of the cryptocurrency. And then the 5 reasons the Bitcoin bull run has begun. And he's basically saying that people are holding. That 62% of the wallets, the Bitcoin wallets, have not moved at all for a year, meaning that nearly 2/3 of those holders are content. They're just buying. They're accumulating. They're holding. They know that this is not the end run. This is not the parabolic, the blow off top. That has not happened yet. And if we look at some of the scales, the bull market of Bitcoin from 09 to 11, from 11 to 13, and then from 2015 through 2017, it actually started in 2014 when that previous bear market bottomed, through 14, that these cycles that Bitcoin is running through get longer and longer and longer. And each high, of course, then gets geometrically taller. So this is why they're thinking the next significant bull run will likely be into the 6 figures, upwards of $100,000. And that's likely within 2 years. And when it goes parabolic, it goes hard, it goes fast. And most of the gains happen inside of about 4 months. We stabilize, and then we bleed it off, and then we do it again in another 3-4 year period. And so then the other aspect was, why do Bitcoins have value? That's where I want to go. That we end up in the traits of money. Bitcoin versus gold. We know gold. Gold has been the money of kings. Gold has been the money that backed the dollar for a long time, but no longer does, and has not for 50 years now, since 71. that period when Nixon closed that window. We did a show on that a little while back. So fungible, interchangeable, the traits of money. Gold is high. Fiat dollars are high. Crypto is high as well. Non-consumable, high, meaning you're not going to eat it. Portability, gold moderate. You can have tenth of an ounce gold coins. You can travel with that. It may not be safe for you to go through TSA checkpoints to get mugged or lose the chain in your pocket. You've got the risk of loss just in portability. Fiat dollar bills are largely safe in that way, and then crypto, of course, is invisible. You don't see it at all. Durability, gold is high, moderate for fiat dollars because ultimately they wear out, and crypto durability, it's on the blockchain, it's not going anywhere. Highly divisible, gold, yeah, you could shave it off, you could melt it down, or you could buy smaller denominations, but still a tenth of an ounce gold coin right now is going to cost you $200. You're going to take that into the grocery store. You're going to get gas with it. It really is not very good as far as divisibility right now. It would have to go through a melting and assaying process. That's not easy to do. Highly divisible. Yeah, we have change for that. For in relation to fiat crypto, you can buy a Bitcoin, but then you can also carve it up into 1 billion different pieces out 8 decimal places, 0.000001. And you can also buy them in those kind of fractions. You can buy 1/10,000th of a Bitcoin. You can buy 1 millionth of a Bitcoin. You can also send funds, down 8 decimal places. The risk is, like every other exchange, that there's a little bit of a tax on the exchange. So you want to have what you're sending greater than the cost of that transmissibility. Secure, meaning it cannot be counterfeited. Gold, although it is kind of surprising, we are finding counterfeit gold, even counterfeit gold held by the central banks and sold by bullion dealers. We're seeing gold gold colored, but yet covered, cobalt, copper. It's unusual. I don't know how rare or widespread it is, but it absolutely happens. And it seems like it has been happening in the Middle East, but a lot recently in China. And cannot be counterfeited. That's impossible. You can't really break the Bitcoin blockchain or even a lot of those other blockchains. They've got you'd have to spoof, confuse, and trick a whole lot of computers. So scarce. Gold moderately, you can continue to mine it. There is some discussion that it can be manufactured via alchemical processes, and I think in time that's going to become apparent that we can do it. We have the technology, the basis or the basic goods to do that. So I really think that's going to happen. Fiat dollars, predictable supply? No, not at all. Not at all. An executive order, an act of Congress, and the money supply could be doubled overnight, literally doubled overnight. And so that means the money that you have is half, again, less rare, less scarce. So its value is literally going in one direction, and that is down. So you can see the rest of the scales, how that works. So a successful currency must also meet qualifications related to scarcity, divisibility, utility, transportability, durability, and counterfeitability. And so where we're thinking and where we guess is, we'll hit chemtrails in a little bit, Nick. How can you not go there? Hell, it's me. All right. How much would Bitcoin have to be worth to rival fiat currencies? And what would have to happen is that we end up absorbing money. And this is when Bitcoin raced towards $20,000 back around Christmas 2017 and through the first part of 2018, as people were actively and aggressively, in a fear of missing out, of FOMO action, converting their dollars into Bitcoin, simply because it was appreciating. Their fiat dollars at the time were becoming less and less. So if we look at the M3 money supply, which includes all the buckets of money minus M1, there's about $45 trillion of US dollars out there. We'll include this as a store of value that is comparable to Bitcoin. To do this, we'll also add an estimate for the worldwide value of gold held as a store of value, which used to back the currency. While we may use some jewelry as a store of value, our model will only consider gold bullion. The U.S. Geological Survey estimated at the end of 99, still 20 years ago now, there were about 122,000 metric tons of available gold above ground. That's an obscene amount of gold. Of this, 48% or 58,000 plus metric tons was in the form of private and official gold and gold stocks. At a current estimated price of $1,200 per ounce, we're now past 2,000 and moving up. That amount of gold today is worth $2.1 trillion, so probably closer to maybe 3.8, 3.9 trillion right now, since where we are with gold today. And then we also have silver bullion that we could roll into that as well as a store of value, because that was the currency that we used in that point in time. So neither of these will treat gold, precious metals, or gemstones. In aggregate, our estimate for the global value of stores of value is comparable to Bitcoin, including savings from large and small time deposits, or money market funds. There they are, money market funds of gold bullion, came to about $47 trillion. Our total estimate for gold in the medium of exchange and stores of values thus comes to 72 trillion US dollars. Again, it's gone up. It's gone up because this is earlier this year. If Bitcoin were to achieve a 15% of this valuation, its market cap today would be 10.8 trillion. With all 21 million Bitcoin in circulation, which still won't happen for a period of decades. We're at about 19 million Bitcoin out there, and maybe 3 million are lost, just unrecoverable. You lose things that you don't see or redeem or protect, because at this point, Bitcoin was in the single dollars. It's appreciated that much. But if we roll that kind of money supply up against the supply of Bitcoin, that puts Bitcoin close to $514,000 each. So let's look at today, where we are. We're dealing with a stock market that is ridiculous. We've got NASDAQ and Apple at record highs, and it makes no sense. And the reason why that doesn't make any sense is because we've had Apple, which over the last 2 years is not making any more than 10% more money than it was at that point when Apple stock was up at that high. So we're kind of expecting a V-shaped surge, meaning down we went with the COVID, and then we're surging back up. But stocks continue to move in an upward motion, unperturbed by anything. With Nasdaq hitting 31 new all-time highs this year alone, and now rising above 11,000 for the first time ever. And then we've got 5 main stocks. We've got Facebook, we've got Apple, we've got Amazon, we've got Google, and why can I not remember stocks, but mostly the Apple juggernaut, which has been, despite taking a rest today on Bank of America downgrades, is up a staggering $250 billion in market cap just since the earnings report last Thursday. So it's ridiculous how much Apple is worth, but still that kind of stock value is not supported by income, by earnings. And that's what's kind of crazy. So what we're seeing is that we've got Apple with a forward earnings ratio of 32 times. Typically 7, 8, 9, 10, 11, 12. We're starting to stretch it. So we've got these stocks that are priced 2, 3, 4, 5 times where they should be. And in the case of Tesla, which still has yet to earn any profit at all, is more valuable via its stock than all other car manufacturers combined. It's utterly ridiculous. So it's a bubble. And in hindsight, we'll absolutely realize that investing or taking positions in these kind of instruments is, it probably wasn't the best thing to do, unless you're going to say short it. And then you're just betting that it's going to go down. And the reason why things have not been shorted is because the Fed or their permanent or their open market operations or the plunge protection team or the Bank of Switzerland or the Bank of Japan or all of these others that have access to Fed liquidity keep going out and buying it, because this is their game. If we were to go to a cryptocurrency game, it would be game over for them. And so this whole system is invested in this. So with gold surging yesterday, blasting above 2,000 and hitting a new all-time high yet again earlier today, increasingly more investors are turning their attention to silver, which just hit $27. And you go into bonds, which you've got the Treasury insured, and it's a protection against inflation. If inflation is at or less than 2%, which is the Fed's goal, and you're buying insurance against inflation, and there's very little inflation, then you're really paying a negative 1% on this 10-year Treasury note. So you're paying the government for them to hold your money. It makes no sense. So Bank of America, just today, silver could hit $50 in the near term. And that makes sense. That's less than a doubling from where we were today. Potential demand additions could push silver into a sustained deficit, meaning they cannot mine enough to meet the demand now required by investors, institutional investors, plus that silver which is used in manufacturing. And if you have even a reduction in manufacturing because of COVID, because of the reduced activity in the economy, because of this pandemic, that doesn't mean that there isn't still this appetite that is looking for safety from buying Amazon at $3,000+ per stock. I mean, Bezos sold 2% of his stock of Amazon. Amazon today still has like 53 million shares yet, but it netted him $3 billion. He just took $3 billion out of the market today. That's crazy. So the other side of this is the Treasury, and it isn't just the U.S. Treasury. There's a lot of governments out there and even companies now, because interest rates are so low that it costs them so little to hold, carry, and sustain the debt. So just 2 days after the Treasury unexpectedly hiked its forecast for debt issuance in this current third quarter, from 270 billion by 270 billion from, they were going to borrow 677 billion up to nearly a trillion. And they borrowed from the market $2.75 trillion in the second quarter of 2020. That is incredible. The whole federal government's budget right now is just a hair over 4 trillion. And I remember when it went over a trillion for the first time. So it's generally expected today that the quarterly refunding announcement would be another blowout, with the Treasury expanding its issuance of longer term debt in the coming months, after depending mainly on shorter dated bills to fund the record deficit. And sure enough, it was all that and more, meaning they had been buying a lot of 2-year and shorter notes. Now they're trying to go out into the longer term so they don't have to roll it over, meaning buy it all over once again. So I did another search on, will the dollar collapse? When will the dollar collapse? And it was crazy that even within this last week, the number and the breadth of the kinds of opinions about the dollar collapse. And if we as individuals, or we as officers of a company, were so far in debt, our operations would not be able to sustain the repayment of the debt. Was the issue with a lot of private equity companies that have been, raked over by private equity, where the private equity comes in, they buy the old company, load it up with debt, they kind of trim down the operations to try to streamline it, and then they sell the company at a higher valuation than what they bought it for. So these companies are ended up just deep in debt and can't sustain the debt payments. And these countries, these sovereign nations, are in a very, very similar situation. The Forbes article: the dollar will not collapse now and not likely at any time in the future. If it does, we will see it coming, but it's not coming now. Follow me on Twitter. Da 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 da. Okay. Effects of a dollar collapse. A dollar collapse would create a global economic turmoil. Investors would rush to enter other currencies, such as euro, or other assets such as gold and commodities, cryptocurrencies likely as well. Demand for treasuries would plummet. And what did we just see? How much treasuries were out there? Record amounts. So if those demand goes away, how do you bring people back in to buy the debt that no one wants? That means interest rates have to go up. And with 23, 24, 25 trillion in debt, if we end up paying more than 2% on that, maybe it goes to 4%. It goes up by 100%. What if it goes up to 6%? What if it goes up to 8% like it was 40 years ago? Then all of a sudden we end up with an insolvency, that we cannot sell the debt even to refinance the debt that we already have. And when that happens, ultimately, you end up with the currency taking the hit, or you end up with revaluating the gold and bringing back a currency backed by something, so that people will actually want to hold your debt or hold your currency. So the IMF is concerned. The IMF is kind of really concerned about this, because it isn't just the United States, the reserve currency. It's kind of rolling out across the world, with a lot of nations dealing with this. So the other word that I'd come across, or it's been said to me, was the GFR, the global financial reset, or global currency reset. And this gal is now the president of the European Community, the ECB, the European Central Bank. And what we've learned, and we like to talk about here, is if you buy the future, you'll get wealthy. If you buy the past, you'll go broke. And we have so many investors, probably still greater than 90%, that have not left the past. They haven't left the old certificates of stock. They haven't left the old system. And it's easier to leave a system that is still functioning than one that is shut down. because you wouldn't be able to get access to your funds. You wouldn't be able to move your funds because the piping, the lubrication through the system isn't working. And so when you want to get into something new, you've got to do it while the old is still functioning, much like getting into a life raft or to another means of conveyance while your car still works. You don't break your car, you don't sell your car, you don't, send it into the shop before you go get your replacement. You get your replacement and then you deal with the junk. So the global reset, numerous stories here, but it was this one that caught my attention. What is the global currency reset? It's the world runs on currency, not money. That is the headline right there. Back in the 70s, Nixon took the US dollar off the gold standard and effectively stole the world's wealth right out from the notices because they were carrying dollar bills, which stated right on them it was convertible to gold or silver, but gold at that point in time. France could take its gold right to the treasury and say, or its dollars to the treasury and say, hey, hand it over, hand it over. But we were running low of gold very, very quickly. And so Nixon said no more. So what it's all about is an insurance policy. Where do you go for that insurance policy for your money? Usually you spend your money on an insurance policy, and if you have a car accident, it has paid off nicely. Your 100, 120, 150 a month, and then the car is totaled. You have either gap insurance because your car is worth less than what you owe on it, or you've got full coverage and you've got replacement value. But we really don't have an insurance policy for our cash, or do we? So this was another article up today. Bitcoin prudent, moving farther from a speculative digital asset, which is where it has been. The potential that Bitcoin will be the primary go-to asset of store of value is increasingly digitized world is now gaining traction. This will continue to buoy the price of the benchmark crypto asset in our view. So it's just now we're seeing gold above 1900 an ounce, and that portends similar movements for this crypto asset. Our graphic depicts Bitcoin following a rally in gold and leading on-chain measure of adoption or active addresses. The 30-day average of addresses from Coinmetrics on August 4th translated to Bitcoin price above 14,000 versus about 11,000 where it is today. And then an auto scale basis since 2017, they're just comparing movement on addresses and activity on addresses to the price of Bitcoin. Because if you have more users, you've got more interest. You have those users which have fiat, which are looking for a place to move it. So the beauty is, and this is from Fidelity dealing with $8 trillion in assets, that they have begun to roll out Bitcoin and using it as an aspirational store of value. Says the leading crypto meets the criteria for being classed as a store of value, but has not yet reached the necessary level of acceptance. What that means is simply you are ahead of the game. And that's the key. If you can get ahead of the game, then here we are with this particular quote, right? Right here, that you're not buying the past, you're buying the future, and that's really what we need, is to get ahead of everyone else. Because once the herd shows up, the silver's going to be gone, the gold's going to be gone. The Bitcoin won't be gone because of its divisibility, that you can buy so much of it in such in smaller increments that it goes a great distance. And that's kind of the beauty of this situation. So let's come out of here. And what I want to do is, in another show not that long ago, we bought some silver as we were talking about currencies. And so I picked that up at the post office today. And again, eBay's nice. We've got users, we've got sellers, it's a kind of an open marketplace. So I'm just going to, open that up and see what we've got. So what I bought was, I'll show you this. Typically 15 years ago, I was buying just silver dimes. It's easy to move, easy to carry. And the price when I got it was $27 for this. And this was probably 2004, 2005. But I was collecting silver because, 9/11 happened and literally everything changed. So it's just a little wad of dimes, quarters, and maybe some half dollars. It looks like there's some half dollars in there, but it's by weight. And these coins are 90% silver. So I think it's a great usable form of currency. And back in the Depression, a silver dime was a man's wage. That's what he was paid. Coffee. a penny or less, a loaf of bread, 3 cents. You got paid in silver, and that's what the common person used as a medium of exchange was silver. That's just what money was. But what got me more interested was cryptocurrencies, and I'm just such a big fan. And I ended up settling on Coinbase. I settled on Coinbase because I could open an account there. It was legal in the United States at that point in time, and that was the beauty of it. So I could use Coinbase, and they had an app. So I could use and watch it and play with it on I was hoping for a picture of the app there, but I'm not seeing one. But it allowed me at that point in time only to buy Bitcoin. That was the only currency that they offered, and I was good with that. I wasn't aware of what they term altcoins, so I just started buying Bitcoin, and I bought Bitcoin, and I bought Bitcoin. And between in that 3 years, I did pretty well. I invested several $1,000s and ended up deep, deep, deep into six figures. And for a time, I was over seven figures, and that was really kind of reassuring. So that gave me confidence that I was doing the right thing. So accomplishment breeds, a confidence in doing this. So I absolutely can recommend this simply because I use it. And once you set it up, you can even earn up to $161 worth of crypto, as there are these companies, these other projects, Kyber, Compound, EOS, Stellar Lumens, sharing with Coinbase aspects of their blockchain technology to kind of entice other people around. So you can set up recurring buys, you can manage your portfolio, value protection, the mobile apps, that is so handy. And then it provides secure storage, again, protected by insurance, industry's best practices. So you create an account with an email. You should probably verify your address. That allows you larger sums to move. You link your bank account, you're checking your savings. And so your purchases can be nearly instantaneous. And then you buy and sell. And then you can share with others. And Bitcoin, if we look at just its chart, which is really kind of impressive, and this is the whole reason I got into it, was I wanted funds to grow. I really, really wanted my income, because I was back here at 2015, where Bitcoin in the low to mid 2000 or $200 range, and we had an epic move to nearly 20,000 back at the end of 17. A couple of nice bull runs in between, but this was a nice blow off top. We came and retested last summer, and now we're kind of collecting. We're collecting and getting ready for the next logarithmic scale up. And we look at it with log scale, you can kind of see this nice cup and handle, and we're ready for the next move. And the next one will take us up probably closer to 100,000. So that's about a tenfold increase, which is why we really wanted to be in some of these alternative funds and resources, was to get return. Because if Apple has already done their blow off top, if Amazon is there, if Facebook is there, if Netflix is there, that's that N word I was looking for. If those big guys, those techies, have already hit their max, then you want to be able to pull your funds out at that point and then bring it into something that is going to be secure. Besides, you can take it anywhere in the world. You can take your Bitcoin balance and withdraw it from a Bitcoin ATM in India, in Singapore, in Europe. It has that kind of portability. So you can take vast sums of money across borders, and it is invisible, and that's the beauty of it. All right, so that's kind of a little look at this, Robin. Interesting. How to dime was 90% silver. That's so true. I think we're at about $4, $4 or $5 now, that it has more silver than that it's worth. And even a copper penny today is worth more in base materials than the face value of the penny. And a gold-backed dollars penny in 1913 is today worth a buck 16. Crazy inflation. All right, Nick. What's up, Scott? Off topic question here. If you've got the time, have you seen a reduction in trails? Yes, there are fewer flights. That's the big one. There are simply fewer flights. Or do you think they're just now using an aerosol method that is no longer visible to the naked eye? Both are true. I think there's a part of that. Even the short trails can leave the cloud behind, but it is also, I'm assuming you're stateside, and because we have fewer aircraft up there, there simply aren't as many trails. And as we get deeper or back into fall where we see more changeable weather, they're still out ahead of these events. They're still towards the what we call it the northeastern quadrant of a storm. That is the high chemtrail area, northeastern and northern quadrants of these storms. That's where they show up. So if you look at satellite imagery, water vapor imagery is very clear on where that activity is. So it becomes visible. I could pop over here. Yeah, Scott, you still out of here. Come over here to water vapor imagery. I'm using the College of DuPage. The data is free. They do a fundraiser every year, I think, over the summer to help out because so many people, the public uses these the college's assets. They have to pay for bandwidth, and I'm really not seeing a lot of trails here. There's not much up here. Let's look at a different sector to see there definitely were some ahead of Isaiah's, but I bet right here we'll find some coming in off the northern side of this little baby. Yeah, because there's a lot of Pacific traffic that coming in from China, a little bit from China, but mostly from Japan. So there's some stripes and some trails, but they'll run a trail from one side to another, and you'll be able to see how it sheds and deforms and so forth. So that's always kind of interesting to me. And I got to do a show on this. You guys keep asking. I got to do a show on this. All right, guys. Thanks for stopping by. Company coming over here in a little bit, so I got to get out of here and get changed. Yeah, Bitcoin. We've got things coming. We've got challenges coming. So much of what is happening behind the scenes, and the public is not aware from this. We're so wedded to the anger that's wrapped up in politics that we're not stepping back and looking in ways outside of ammo and guns to protect ourselves. Garden growing is really just taking a huge leap in acceptance. Uh, Rare, I think, within 10, 15 years will be the grassy front yard. That dirt will be utilized for its ability to support life in ways for all of us outside of just insects, and we'll have to repair a lot of land from petrochemical use as these companies are so deep in debt that we talked about earlier. So there's a plethora of topics that we can yet and still will discuss as we move in the days and weeks ahead. Thanks for stopping out, guys. Good to see you there, and we'll be back with a look at weather tomorrow, 5 o'clock Mountain, and another perspective the following Monday at 6 o'clock. Have a great evening, everyone, and as usual, keep looking up. You don't know what you're going to see, so keep looking up.